Welcome back to All About Money on HKIBC. I am Chloe Feng. Joining me today is Tom Ko, the head of capital markets and executive director of Cushman and Wakefield, Hong Kong. We'll analyze a real estate investment in the city amid the rising interest rate environment. Great to have you on our show, Tom. So now let's talk more about the investment part. Can you briefly run us through the performance of the real estate investment activities during the first half of the year, and also your thoughts on the performance?
Okay, for the first half, the transaction over $100 million in Hong Kong is about $30 billion, which is coming down compared with 2021, coming down 35%, but which is still 30% higher than 2020 first half, which means at the early COVID beginning, we have lower transaction amount compared to this year. And we are seeing there will be more transaction later on this year, something like $40 billion. And together, it will be $70 billion transaction for the full year. Because given there's interest rate hike impact, there will be more sellers who's willing to lower the price or to sell the property at a more reasonable price.
Right. And so in that way, the interest hikes would not somehow damper the local property investment. Am I understanding it right?
It really depends. But right now, it's not only Hong Kong investor. We are seeing lots of international money coming to Hong Kong in the first half of this year. Normally, the international investor only accounts for 20% of the transaction. But for the first half of this year, it accounts for something like 50% of the transaction.
All right. And as we briefly discussed in the part one section, we've talked about the U.S. Central Bank, which has flagged 10 increases through the end of next year, with Chairman Jerome Powell already signaling another 75 basis point rate hikes, possibly just next month. I'm wondering, is it now a preferable timing to make property investment ahead of further interest rate hikes? So what do you think about the timing for the property investment now?
Actually, if you are a long-term investor and you have a very low borrowing cost, I think it is a great timing to bottom fishing some prime property in this market. Because in low interest rate market, everybody have a very strong holding power. No one is willing to offer property at a reasonable price. And so in the long run, given that the interest rate hiked in recent month or even 1 year, I think it is good timing for the long-term investor to look for some bargain hunting.
Right, but just in this week, we've seen the Chairman Jerome Powell also expressed his worries about a possible recession in the U.S. Do you think this kind of signal would damper the investment sentiment?
Hong Kong is in a very special situation because right now, there's an interest rate hike is all about the U.S. economy, okay? Because they think it is too hot, the inflation is too high. They have to increase the interest rate to dampen the economy. But in Hong Kong, we don't have that kind of problem. Or even in China, you can see they are lowering their interest rate in the coming months and give a lot of incentive in different sectors. So I don't think there will be a problem given the interest rate damper the U.S. economy.
All right, yeah, the situation is indeed quite different as well. But then I'm thinking about the mainland China's property market sentiment or investment sentiment. You know, the property market seems to be plunged a lot on the mainland. So how do you think about the sentiment on the mainland would somehow affect Hong Kong property investment sentiment as well? What is your thought on this?
I think for PRC market, we can see a lot of decline over past 12 months, but in the long term, we think it is a good way to keep the market stable. And you can see now, even in June, the residential sales are picking up actually. But of course, compared to in peak time, it goes down quite a bit. But for a long-term point of view, we think that PRC residential policy is good for the market for a healthy progress.
Right. While the interest rate seems to be, raising some concerns over the long-term repayment affordability for residents, then given that many developers are lowering the home prices, so a lot of home buyers also snapping up the properties, which is, I'm thinking, do you think in some ways the rate hikes are good for Hong Kong property market? The city is one of the most expensive cities in the world for people to live in. And now with the rate hikes, it seems to be that is cooling down the housing prices. So how do you think about the pros and cons for the rate hikes for the public, for investors, and also for property developers? I mean, there surely will be different impact on them. So can you also help us to analyze the different pros and cons?
As you said, I think it's a good thing with the rate hike to cooling down the market a bit. But as I said, for home buyer, their mortgage length will be 20 to 30 years. There must be ups and downs in interest rate. The most important problem is they have to be cautious when they do the stress test. And for the investor and developer, I think it is a good timing if they look for long-term investment because the price is more reasonable now. And for the developer, I think there are a lot of opportunities coming up in different area in Lantau or Northern Metropolis. There will be a lot of more supply that the developer can invest on.
Right. We can talk more about the Northern Metropolis later on. But before that, I'm also thinking your company has reported that the hotels has emerged as an attractive asset class amongst institutional investors. So tell us more details about this. And do you foresee more of the institutional investment to be seen in industrial and hotel assets in the city?
Yeah, which is quite related to the question you asked before, because the interest rate hike, those international investors, they have to look for something with value add that is not only purely rental income. For the hotel sector, which serve as a strategy called multifamily, which is a global strategy that is, in the old days, we call rental apartments. And because in the past 3 years, the border almost closed and the operation for the hotel owner is not very good. So some of them are willing to lower the price to a more reasonable level. Then those international funds, they can buy those hotels and convert it into a rental apartment for rental purpose, and they hold it for 2 or 3 years. When the border open, the tourists come back, they can sell it out as a hotel again. They can earn a very handsome profit afterward. And for industrial sector, which serve the same strategy, that they can convert it into something we call new economy, mini storage, cold storage, or data center. And we can see there's still a strong demand in both sectors. It's 90% from international money, and which is a good sign. That means Hong Kong is still a sought after spot for the international money to invest on.
So would the current border closure situation be a significant factor affecting this market, or do you think the investment would not be significantly impacted by the current situation, which is border closure?
Given the border closed right now, it's quite hard for the hotel owner to operate the hotel properly. So which create a golden window for investor to bargain hunt for some hotels. Once the border opened, tourists come back, I don't think the hotel owners still want to lower the price to sell it out.
Got it. And also, the city is developing the northern metropolis, and the extension section of East Rail have already improved a lot of the connectivity between the new territory and the urban areas. So how could investors also take advantage of this initiative offered by the government to yield profits?
Yes, we think it is a great opportunity in coming 10 or 20 years. And actually, we have some developers invest on some of the plots already. But lots of the planning is not confirmed yet. First, we have to confirm different planning usage in different areas first, which will coming up in 1 or 2 years. And for the investor or developer, once those planning are confirmed, there are lots of residential development opportunities and logistic development opportunities, which is great for some international money. And for the home buyers, because in the future time, the connectivity is very good all the way from Central or Admiralty to Shanghai or the North Circular Ring Rail, which serves China and Hong Kong, I think, which will greatly enhance the connectivity between two areas. The home prices over the new stations will be a good investment.
All right. So in that case, I think that the investors should keep a close eye on the updates of the Northern Metropolis or the extension of the renewal of city projects. So thank you very much for your analysis and insights, Tom. That's Tom Ko, the head of capital markets and executive director of Cushman and Wakefield, Hong Kong. That's a wrap for today. We'll be back on HKIBC next Sunday. I'm Chloe Fong. Until the next time.
Thank you, Chloe.